what are the two most important aspects of Quicken that you should be looking at to really use it for what it's meant to be used for? If you want to learn the answer to that question, stick with me here. Joe DiSanto, how are you? Your friendly neighborhood personal finance guru. I want to go into this because it really is kind of the heart of the matter, so to speak, about why we're using Quicken and what we're trying to get out of it, the information we're trying to glean so that we can know that we're doing well in our lives, in our personal financial lives, and also that we're staying on track. And by that, I mean the track that Quicken helps us to create, if you use it well and use it thoroughly. So here we go. Without further ado, we're going to get into this topic, and I'm going to walk you through these two super important metrics. So I have Quicken Classic for Windows up here on my screen, and this video actually would apply to Quicken Classic for Mac, or even the new Quicken Home and Business. Maybe not in the functions of how I get to things, but in the overall concept. Honestly, it would apply to any personal finance software, though I assume if you're watching this video, you're probably using Quicken. So, to cut to the chase here, the two things, summary items that we look at in Quicken that really kind of show us how we're progressing and how we're doing is our cash flow report and our net worth, okay? Now the cash flow report here, at least in Quicken Windows, Classic for Windows, is here under banking. It's cash flow. Now, I often say you need to run your personal finances like a business. So what these two, key metrics or key reports are the equivalent of what is in business often called an income statement or a profit and loss, and also a balance sheet. Now, the cash flow statement is the equivalent of an income statement or a profit and loss. There's some nuance between the slight differences of what those different names mean, but in essence, for the purpose of this video, that report shows your money in, your money out, and of course also gives you detail on where that money in came from and where that money out went, right? So that's your cash flow report, or I prefer to really call it a profit and loss. The net worth, which you can actually see here just all the time in this left-hand column. See down at the bottom, it says your net worth here. You can also see in report form if you wanted, and it would be right here, net worth and balances. And it is just a summary of all your accounts, positive and negative, meaning, assets, liabilities, and so on. And just taking the sum total of that all. And your hope is, of course, that your net worth is positive and well into the positive. Our goal is obviously to get our net worth to be as high as possible. That ultimately becomes what we refer to as our retirement fund in the long run. But of course, when you're young, your net worth isn't generally that large. Sometimes it's sadly in the negative. Mine, if you watch my videos, I had a very sad net worth of negative, I think, $72,000 or even $6,000 around the age, I think, of 25. School loans, credit cards, all that. So I was pretty deep in the hole. Luckily, managed to get out and then some. But I was using Quicken all along the way. That's why I know what my net worth was at that age. And it helped me, create a plan, stick to a plan, and so on. So, now, I will say that the net worth slightly differs from what a business balance sheet is, just in part in the way that it's formatted and the way it's read. But in essence, it's kind of the same thing. And for the purposes of personal finance software, it's pretty much your balance sheet. All right, I'm going to talk a little bit more in detail about this. So, if you haven't figured it out, Quicken is really just a place where you can bring together all of your data, which really your data is your transactions from your bank accounts, your credit cards, your loans, your whatever. All of the transactions of you making money and spending money, and then the third type is transferring money from one account to another. Quicken helps amalgamate all that into readable data. Okay, it makes the chaos of all your personal finance stuff and all these different places, it brings it all together in one place and turns it into readable, actionable information. And these two reports will say, or these two basic financial reports, the profit and loss and the balance sheet. Again, those are business terms, but cash flow statement, net worth report here are the ultimate scorecard or KPI, key performance indicator of how you're doing. Of course, there's lots of, you can go much deeper into that statement, and you can get into all the details and so on. We'll talk a little bit about that. But at a high level, those two things are your sort of main scoring points. And now, when it comes to the cash flow or profit and loss, our goal here is to know in a given time period, whether it be a short time period or a long time period, have we spent more than we made or not? Obviously, we want to do the not. We want to make more money than we spend, and that leftover money, that difference, that inevitably becomes our savings. Now, we may put that into a savings account specifically or not, or into an investing brokerage account or not. Hopefully, we will put it in an investing brokerage account. But the true positive net result of that expenditure in that time frame becomes really the amount of money you've saved or lost in that time frame. So I have up here a year-to-date cash flow statement for 2026. Now, this is just my example Quicken file. These are not real practical numbers, obviously, and they don't include all the ins and outs and what have yous of life, but they have some basics. And here, this basic report, I have set up year to date, and I have displaying by the column of month, or in a monthly increment. And I like this report, and I look at my own report of this throughout the year, and I say, one, how am I doing? Am I spending more than I'm making? Two, am I sticking to my budget? Essentially, probably if I'm spending more than I'm making, then I'm not sticking to my budget. But am I sticking to my budget? And if so, or if not, how can I get back on track? And in here, you're going to see, look, I have income, I have expenses, I've just teed up here or putting examples of work income. I put W-2 income here for this fictitious person. Obviously, they're making about 60 grand a year, so it's probably, maybe a younger-ish person. But, and maybe they have a little side hustle and they make some business income here. So we have their income and we have their expenses. Now, if they have business income, would like them to keep their business expenses, stuff that's completely devoted to their business, like they wouldn't have made the money unless they spent this money, otherwise known as cost of goods sold, as an expense line item. And then I have living expenses in here. And this person, we got their car and their gas, we got some entertainment, gym, media books, groceries, restaurants, some housing. Now, this person owns a house, just FYI, and they have taxes, So we have income, we have some business expense, we have living expense, and we, of course, have taxes. The sum total of those 3 months, they made $16,200. They spent $12,363.63. Again, random numbers I put in. And they had a positive net result, meaning they had a profit, you could say, a net profit of $38,36.37. So in that time period, from January 1 to March 31st, their net worth went up by $38,36.37. Now, they haven't, I guess you could say, completely crystallized that savings because life is long. They got the rest of the year to go, and you know, sometimes in life the rest of the year goes great and greater, and your net worth goes up a lot. And then sometimes you have a bad year, and then you know that emergency happens, and you hit that emergency fund, and your net worth sadly goes down. It's not always going to go up. You know, some years it'll go up. And then, you know, otherwise you have investments. Obviously, those go up and down with the market and so on. But, you know, over the long run, just probably like the stock market, you want your net worth to be going up on the whole overall, even though in the minutia, it goes up and down sometimes. So this is our profit and loss or cash flow statement, and it's showing us our income and expenses and letting us know where we're spending money. Now, this fictitious person has very reasonable expenses, so we can't really look at this as like, wow, I should compare myself to this person's expenditures, because you shouldn't, because most of this is nonsense. But this person could say to themselves, hey, I saved some money. Could I have done better? Where am I probably spending too much, you know, that maybe I could spend less, and increase that savings, increase that net worth? A lot of times that's going to be in your discretionary categories. In my categories and sort of organization, I have discretionary, and then I also have kind of general. In general, I have groceries and restaurants. But restaurants, you know, it's part discretionary, part required. We all going to go out to eat, and it's part of our socialization. So to expect you're not going to go to restaurants is unreasonable. But it is the degree to which you do it, and the restaurants you go to, and all that is the discretionary aspect. But oftentimes you can save money in here. You know, if you buy groceries at Whole Foods, you definitely can save money in here by buying groceries at other less expensive locations. For like, you know, your mortgage and so on, obviously that's not going to change. Your utilities, those are what they are. I mean, obviously with your utilities, you can do something there to reduce, you know, those things if you want, but by and large, they're not going to swing that much. Your car payment is going to be the same, and gas and stuff like that. But usually there's more stuff in this discretionary category, like travel, like, I don't know, whatever. I have other videos on detailed budgeting, but you're looking at this and saying, hey, how am I doing? Am I making more than, or spending less than I'm making? Am I having a net positive outcome? And that's becoming my savings. Now, over to the net worth aspect. So over here in this column, I'm going to walk you through this fictitious person's sort of life. They got a personal checking account. They have their couple of credit cards. This one has a balance. They have a little stock account here, you know, a little bit of money in it. I set them up with a house. So they have a house. They have a mortgage. The impound account here is just that. If you have a house, you know what an impound account is. But I kind of track the activity in the impound account. So this is what's in there right now, but eventually that'll get drained for taxes, insurance payments as they go. But, you know, their house less their mortgage is a positive number. That goes into the net worth. They have a side hustle, that little business. They got some money in that checking account. They have $4,200 in there. And when you add all this up, the personal account, less the credit cards, the investing account, the property, the business, they have a net worth of $79,612.91. All right. And this net worth here, obviously it's made up of many things. Some are cash, some are assets. And those, you know, they're not the same thing, but they are all your money. Like your house becomes essentially a savings account for you via the pay down of your loan and the appreciation of the asset. I'm a big fan of buying a house. I know property is very expensive today, and that's a bummer, but property's pretty much always been at its highest priced, throughout history. So, but and your stocks here, they're not cash, but they are what we call liquid asset, meaning they could be sold in very short order and turned into cash. This number is often going down, up and down as stock prices change. But at any given time, it's worth what it's worth, and it's part of your net worth. Now, if we go over here to the dashboard, I did a video on the Quicken Classic for Windows dashboard and how to get some better widgets that I find more helpful. I have a widget set up here called Net Worth, and it's a cool widget because it shows you how many assets you have, how many liabilities you have, and then sort of right in the middle, it does the math on that and shows you a net worth. Now, this, again, fictitious account here, so, don't use it in any comparison for yourself, but for this fictitious person, they did really good in 2025. Their net worth went from $21,000 in January of 2025 to $78,000 in December of 2025. I don't know what they did in here, but they made some good moves and they made some money. I'm going to hit home this final illustration there, but if we look at where we're at here in our sum total, we added 38, 36, 37 to our net worth, which is currently at 79,612. If we go over here to my chart, we're going to see that the net worth of today matches our bar. And we can see that if you did the math here on each of these months, this month we did good for the month. We netted $1,000. This month we netted $1,800. This month we netted $886. Our net worth is probably, from here to here, going up by about $1,000, then going up by $1,800, and then going up by another $800 to our current total. And so that's why I'm always saying, if you put $5,000 in a savings account last year, but you increase your credit card debt by, $7,000, or your net worth went down, I should say, by $7,000, you haven't saved any money. You've just lost $2,000. It just so happens that $5,000 is in your quote-unquote savings account, but your credit card balance went up ultimately throughout that time period. And I point to the credit card because usually when we spend more than we make, that difference, that extra money we've spent that we haven't made, has to come from somewhere. And in our case, it's, personal finance case, it's usually credit cards. So if you go look at your profit and loss and you're like, man, my profit and loss says I lost $3,000, well, you're going to find that money is most likely sitting on your credit card. Now, other places it could sit, if you have a home equity line of credit, you could have utilized that. It could have just been the case that you had, a bunch of money in your checking account, and 3 months later you have a bunch less, and that's because you lost or you spent $3,000 more than you made. So if you're always spending less than you make, your credit card should be at zero and your checking account balance should roughly be going up. Or if it's not, one of your other account balances, hopefully your savings account or your brokerage account, is going up. And finally, I want to say, if you want to learn more about Quicken or personal finance in general and how they sort of interweave, check out my courses. I have one on Quicken. It's called Quicken Mastery, which obviously goes into detail of Quicken, both from a beginner point of view and more of an advanced point of view. But my personal finance mastery course sort of zooms out, and it covers the whole breadth of personal finance. Quicken, of course, is in there. It's one of the 5 components that I talk about in my personal finance sort of framework. But it goes into all the other topics that are important beyond just tracking your finances, It's about planning that are important beyond just tracking your finances. It's about planning, from today and creating a map to where you want to go. It's about investing. It's about income generation, and also, of course, about tax efficiency. So I cover all that in those courses, and both of them come with my Quicken database template, which sets you up very easily with all of my categories and helps your Quicken work and look like mine does in the videos that you're seeing. So check those things out. Links below. I will see you in the next video. Thanks.